The candle range theory is the most mechanical system there is in trading because it is objectively based off of one candle, and I'll be explaining each and every single one with backtested data that you guys can use and apply to your trading days. Now I'm going to be showing you guys each and every single strategy going from beginner all the way to advanced, and then you guys can choose which one fits your trading personality the best. Now starting with our first one, this is based off of our general formation of our candle range. Okay, going back to what we always look for. We look for a specific candle, okay, a specifically timed candle, and then we mark out that high and low point. Now, the next point is to wait for price to actually play around within this range, okay, but then actually create a sweep. Now, this also has to be a time sweep, which would depend on which time candle you're trading, okay. For instance, if you're trading your 5 AM candle, you want your sweep to happen around your 9 AM to 11 AM Eastern Standard Time, okay. And to have all these time frames on your chart, make sure you're using UTC -5 since we are going through daylight savings. And then you would want price to then go to the opposing side of the range, okay. So the low side liquidity and then goes towards the high. Now these are the times where these high probable sweeps usually happen, okay. But if you trade the 5 AM candle, make sure that your sweep happens around 9 AM as I've told you guys, okay. And then you'd want price to then look to reverse to the opposite side of the range, okay. And then the actual way for you guys to enter is either using a rejection block or a CRT. I've already made videos on that, which I can link above or at the end of the video for you guys to also watch. Now let's go into an example actually using our 5 AM time CRT, okay, using this exact schematic. So firstly, we're going to mark out our 5 AM 4-hour candle, okay? So you can see we're on the 4-hour time frame here, and this is our 5 AM candle for this specific day. We mark out our CRT high, so our candle range high point, and our candle range low point, okay? We then go down to the 50-minute time frame. Now this is the 50-minute time frame. Now this creates the entire range for that entire session, okay? For our CRT, we need price to make a sweep of either the high point or the low. Now we need the sweep of our candle range, okay? So you get our sweep and it's exactly at 9:45, so it's still within that time range where we usually look for a sweep. Now we're gonna monitor the 5-minute time frame and look for a changing state on this time frame, okay? And from this point, as you can see, since price breaks this candle wick low over here, that we consider our changing state of delivery, and then we can just look to enter with this candle impulse here. Place a stop loss above that candle high, and then we just target the opposing side of the range, okay? Okay, pretty simple. And then we go back to the 4-hour time frame here. You can see that was the entire sweep and go, okay? As you can see, it also following the general trend that we're on this time frame, okay? Now our next one is going to be our 3-stick candlestick formation, okay, or our 1, 5, and 9 sequence, okay? Mainly understand that this one is usually based off of the first candle creating the CRT range and formation, the third one being the actual sweep, and the third one actually being the one that distributes to the opposing side. However, the third candle can be actual multiple candles, so do keep this in mind. The main point is that it actually distributes to the opposing side. Now, as you can see here, with our 1, 5, and 9 sequence, this is based off of the 3 most important 4-hour candles, okay, that we use in the market. Your 1 AM will form out your range, your 5 AM will actually form out the sweep, and the 9 AM creates the actual distribution, and strategy becomes even better, especially on news days. So FOMC, CPI, or NFP days, especially like this, we see that when the news release is exactly at 8:30, impulsive candle, okay? And now this is also based off of the general manipulation that also happen around this time, okay? And this is usually prevalent on pairs such as gold, NASDAQ, your NQ, ES, all those major assets. Now the entire flow for this strategy is that we first want to mark out the 1 AM CRT high and low point. We want to wait for the sweep on the 50-minute time frame, and especially at 8:30, okay? Because usually the 8:30 creates the flip. You want to wait on the 5-minute time frame for a change in state of delivery. This can be the 5-minute time frame, your 1 minute and your 3 minutes. And then you want to also target the opposing side of the range, okay? Now, here's one more confluence that can even enhance the strategy. It's actually by using your SMT. So if you're trading NQ, you want to look at ES to see if it created any SMT. As you can see on NQ, we made a high, okay, we broke above this high point right over there and made an actual sweep. However, on ES, we have not made a sweep, okay? Instead, we're moving lower. This deviation in price allows us to understand that there's a higher chance for price to actually distribute lower, okay? And as I said, your recommended pairs to actually use this is for gold and silver, NQ or NAS and S&P 500, and then also USD, and then a pair like GPSD, okay? Now for your 1, 5, and 9 sequence, you want to make sure that you're usually trading this on a news day for the best result, and you want to make sure that you mark out your 1 AM candle. And as you can see, I'm using our -5 UTC zone. This is just because of daylight savings, but on normal time frames, it would usually be UTC -4. Now we mark out our candle range high and low point. Now on your 15-minute time frame, you want to look for price actually make a sweep of either your candle range high point or your candle range low point. These act as liquidity levels. Okay, and then we get our initial news move at exactly 8:30. And now we go down to a lower time frame. And now all we need is a change in state of delivery, which will happen once price breaks this candle low point. And once price breaks below there, we can look to enter stops above that point, and then we just target the opposing side of that range. Okay, we took 1 point of liquidity, which is the highs, and now we're going to target the next point of liquidity, which is the lows. And if you also look at this, you can identify we're following our AMD model, this being our accumulation, this being our manipulation, and this possibly being our distribution. And as you can see, price now reaches the opposing side of that range. And if we go back to our 4-hour time frame, as you can see with our candles, it follows that 1, 5, and 9 model. Okay, and now if you don't want to just be seeing this all in hindsight, you can also trade with me for free by clicking the link in the description or checking out our trade updates on our Instagram with before and after the trades that we all send to our Discord server. Now here we go. Here is our 5 AM 4-hour candle. We mark the candle range low point and we mark the candle range high point. Okay, now immediately that is what we do for the 4-hour time frame. We now go down to our 30-minute, and on the 30-minute time frame we want to look for a sweep which is within our time range. And you see we get this sweep at exactly 10 o'clock. Now we just need a chain in state of delivery, and now there we get our first chain in state of delivery. As you can see, that price breaks above a structural point and it closes on that above that point, and now we can enter right over there, stop loss below the order block, and then we target the opposing side of the range. Okay, and then that's another example of how you use your CRT range. Now in terms for our trading checklist, this would not be part of the A+ setups, okay, since it did take price quite a while to return back into the range. Okay, and you guys don't want this all to be hindsight knowledge, you can also trade with me live, or you can go onto Instagram and look at our trades that we send out to the Discord, the before and the after. So it's no more just hindsight knowledge, but it's solidified knowledge you guys keep on getting reaffirmation on. Now our next strategy is going to be our after impulse recovery. Now this is based off of when you don't actually want to be part of the initial news trade, okay, instead you want to wait for later on. However, with the after impulse recovery, you do have to understand that it takes time for price to actually reverse back from a major news event, okay, or any major impulse. So in this example, you see here is our major, and usually this is based off of your 9 AM candle, okay? Since the 9 AM candle usually has the most volatility. As you can see, price makes that high and low point, price sweeps it, and then takes this time to actually reverse back up. However, this usually leads to price creating an overall move, which even we can extend higher, okay? The second point is also, you should also look to take out majority of profits, at least at the equilibrium of this candle range. Okay, now let's actually go in depth into this. Okay, this is a movement that builds momentum from the early hours, okay, of the New York session during 1 AM to 6 AM, okay, and this leads to a very consolidated candle for the 1 AM candle. Okay, so you want the 1 AM to be very consolidated, okay, and then the normal procedure on these usual news days right after, okay, is that the 9 AM actually creates the final distribution, okay, at 8:30. Then we usually see price reverse where price starts to take out all the initial FOMO sellers. We just see this massive red candle, and then they start to reverse price back up. Okay, so you guys can take advantage of both the sell move and the move back up. Okay, and here's one more variation of this. Okay, as you can see right there, major impulsive candle, and usually the best time this is used is when you're already in a preceding market and then you have an impulsive candle that goes against the normal trend. As you can see, we're following a bullish market here, and then we have an impulsive candle that goes against that trend, which is bearish. So price will majority of the time follow right after that previous preceding trend, which was bullish. As you can see right here, price makes this major impulsive move, okay, major impulsive candle, and then it comes, sweeps that point, and then looks to push to the upside, okay, to the opposing side of the range. As you can see, here's your 9 AM candle, and then price makes one last sweep and then moves to the other side of the market. And as you can see, usually these moves do take time, even going towards the next day. So think of it like a fuel tank. Your price uses all the fuel with this major move. It's going to take some time to actually fuel back up, but in the next day it's all filled up and then it starts to push once again. Now let's look at some more examples of this so you guys can get used to using this. Now for our after impulse recovery, we want to make sure that we get a sweep of this candle range low point or candle range high. Now it's very important with the after impulse recovery is that usually if the market was very impulsive in one day, it's usually going to start to slow down towards the New York PM session. So you want to focus on getting your sweep in the next day, okay? Now it is exactly midnight going towards the next day, and we have now made the sweep, okay? And as you can see, our first initial sweep was actually a fake out because price swept and then still came back to take out that point once again. And now we can look on our lower time frame for a change in state or delivery, and our change in state will occur once price breaks this high point here. Now we can actually enter right over there, stops below that point, and then we can target our equilibrium of our candle. And as you can see, now we see much more volatility once again as price tries to recover from that impulsive day. And we go back to our 4-hour time frame here. As you can see right there, 9 AM, okay, impulsive candle, and then price comes to recover back into that range point. Right now, we've gone over 3 major strategies that should already give you guys a very good tool set for any market environment, that being news days, that being very impulsive days, and that even being slow consolidated markets, okay? However, now we're gonna look into how we can actually catch on moves once price is already moving aggressively, okay? And that is when we're gonna be using our previous day high and low strategy / our daily candle close, okay? Which I specifically call our CRT. Now, you wanna focus on your previous day's candle closing price, okay? And if the preceding trend is bullish, you want price to firstly dip below, okay, that previous candle close, and that will actually be your new candle opening, and then look for price to actually extend high, okay? Now this is truly based off our candle mechanics, and I'll actually show you guys that later on. But my main point is that you want to be buying below this previous candle close, okay? Now let's look at an animation of this. Here's our previous day candle, and here we're starting the new day candle, okay? Marking our previous candle close and the 25% and 50% of our previous day candle, okay? As you can see, we start off the day bearish, which is extremely good for us because we are below the previous candle close and our new candle opening, okay? Now we're looking to enter any trades with a change in state delivery, a market structure shift, a change in character, all these little reversal patterns for then price to look to distribute in the next movements, okay? And then obviously you'll be entering at the wick of the trade, okay? Now here's a bearish example of this bearish candle, okay? A lower time frame, here's your bearish candle. And then we start to retrace in the start of the day to the higher side, which is extremely good. You can start entering your trades, okay? And once price starts to push down low, okay, that's when you want to be entering your trades and then getting involved with the continuation of an impulsive day. Now understand this is extremely important. When using your candle close and candle impulse theory, price is not looking to make a sweep and then go to the reversing side, okay? Instead, it's looking to retrace and then continue the previous trend, okay? Now, if you guys are confused about this, you can always just trade with me live, which you guys can sign up in the link in the description, or get my entire checklist, which specifically speaks about this model here, okay? Now let's get into some more examples to really solidify this new strategy so you guys are able to use it. Now, this is your candle impulse 3 or candle close strategy that we look to use after price has done some sort of candle range sequence. And if we look at this right over here, you can see that price did create that normal CRT range, okay, sweep, right? So price sweep the candle range low, and now it's extending towards the high. However, we want to take advantage of the new impulse that price creating, okay? So we're gonna focus on our most recent candle, okay? And right now I'm on the 1 hour time frame, but you guys can also apply this especially to even your daily candles, okay? If you want to look to use it for your daily bias or using this as a daily candle close strategy, okay? Previous daily high and low strategy, you guys can see I made a video on that. Okay, so it's very similar to this, okay? Now we mark out the candle high, the candle low, and the most important part, our previous candle close point, okay? And now from this point, we're gonna take our Fibonacci from the low to the high point, and we can just see, yeah, the 2 important levels, our 25%, okay? And our 0.5%. Our best CITs will happen once price dips below and reaches the 25 or 40% and then starts to extend high, okay? So we go down to our lower time from here. Now here's our entire candle range, okay? And you can see we start off with the opening of the new candle with the consolidation. Now price broke out of that consolidation. Now making the manipulation, okay? So we can see we're already following our accumulation, manipulation, and soon after distribution sequence, okay? And now that we're also at the 25% level, all we need is a change in state of delivery, which you do get right over there. And now we just enter our trade, okay, above this point. Now the next point in terms of using your targets, since this is a continuation model, you can use your candle high point as your TP, or if you're looking to maximize your profits, you can use our Fibonacci target points, dragging from the entire retracement, okay? And these are the 3 important levels, okay? Our 1.27, our 1.7, and 2.68, okay? And now since this is a very impulsive market, okay, we can look to even extend this all the way to the high point, okay? Making sure to give a lot of space for our stop loss there, okay? And here's our new trade. Now as you can see, price goes towards your TP, okay? And that's how you take advantage of trading every single candle, or even looking to trade after price creates a candle range using our daily close, our candle close strategy, or our candle impulse theory. Now this is the most important strategy, okay, because you can apply this to every single time frame on every single candle, okay, which is our 1 candle mechanic. Firstly, we have to understand how a candle actually moves. It firstly starts off consolidating, which is that opening of that opening range of that candle. Okay, now this is going to be a bearish candle. Price will firstly become bullish, which is the retracement, which you guys would have seen previously in our other animation, and then it starts to distribute lower as it pushes down to the downside, and then it looks to retrace back up and then leaves wicks on either ends. Now, as you can see here, here's how you specifically enter using your one candle mechanics. Okay, firstly, understand we have the accumulation, manipulation, distribution, correct? You want to be looking for price to create the same schematic and then be entering during the distribution. As you can see, price starts with the opening range being very consolidative, and then it manipulates and then starts to become, and then once it creates that change to delivery below this low point, and then reverses back up and then starts to distribute low, okay, which you would have been able to find entry or for an order block or any other zone. Firstly, in the early hours of the day, we are consolidative, making your accumulation. We then manipulate, and it's much easier to identify your manipulation once it's actually happened, okay, because it'd be very easy to see that price creates a consolidation and then breaks away from that, okay, breaks out the consolidation. The next point is for price to actually reverse, which is your distribution, and that is usually within the midday, and then starts to reverse back up, okay, to create your candle closing point. Now let's look at a few more examples so you guys know how to fully implement all of these strategies. So now when you use your one candle mechanic strategy, you firstly want to get this indicator called your higher time frame power of 3, enable that and set it to your daily candle, okay, and then just reduce this to focus on one candle, okay. Now once you identify your previous day candle and the new day candle, you want to firstly mark that opening price, go down to your 50-minute time frame, okay, and you can see that indicator perfectly aligns to where the new candle starts, okay. Now all you need is for price to create a power of 3. Now we're going to play this forward until we do see price starts to break out of the accumulation, and that will be signified by a major manipulation, okay. And remember, when we start off our new candle, we want price to firstly be bearish, meaning it has to be below our opening price, and then we can look to trade while price distributes above. Okay, lovely. Now as you can see, it's much easier to see once price has actually made the manipulation. Now we can actually identify here was our accumulation, that short consolidation. This is the purging manipulation, okay. This is our accumulation, our manipulation, and now we can look for price to start to distribute higher. And this is also very good that we're below our opening price. And now you can see that price looks to go above, okay, and actually starts to distribute. Now our first entry could have been right over here once price starts to distribute at 8:30. However, we can always just look for price to rebalance at our breaker blocks, okay. So you could go on to the 1 hour time frame here, and since this is a daily move, we can always look for price to move on a higher time frame, okay. So as you can see here, this way price broke our previous structure, okay, and then this would be where we would find our breaker block right over there, okay, and then we can enter price right over here once it returns and rebalances at this point. Top is below our breaker, and then we look to target higher for our 1 to 3, and as you can see, price actually plays off of our zone, and we can see that our higher time frame candle is being printed right here, and we can see now that we created that major distributive daily candle. As you can see, we traded the entire candle, okay, simply using our one candle mechanics. Price was firstly bearish and then looked to flip and become bullish, okay, or using our candle opening. As I said, if you guys would want to see me also trade all of these strategies live, make sure to click the link in the description and also get my exact A+ trading checklist that I use every single day. I've also made an entire playlist showing all of these strategies on specific details that you guys can also watch right now.